Welcome to another edition of The Why Trader. I'm your host, Rothman, and today we're going to be talking about a topic that has completely exploded. 0 days till expiration options. That's right, these things are flying off the shelf like hotcakes. People love them. That's right. Are they a gambling mechanism or are they a viable trading instrument? That is the question. That's what we're going to answer. And what is the impact of these 0 days, 0 DTE options on volatility and the overall fragility of the market? Meaning, can it cause a collapse? Can this exasperate a move? So we'll address all of those questions and more on this episode. Number one, my personal thought is absolutely these things are lotto tickets. Absolutely these are gambling mechanisms. We live in a gambling culture where sports gambling is legal and people want instant gratification. So absolutely, this is a gambling tool that really, I guess for a small amount of money, if you want to have some fun and you want to throw darts at a board, go ahead, have at it. But it is no one thing that it is gambling 100%. There is no way any human being on planet Earth is going to guess the direction of a market on a daily basis consistently. Not going to happen, never has, never will. Okay? So, does it have a place in somebody's portfolio if they want to, go for it? Possibly. Not for me. Maybe for a little bit of fun, I can throw something out there. But I'll tell you something that we've done the statistics on it and we've analyzed it is if you take a look at 0 days till expiration options versus 1, 2, 3, 4, 5 days, even up to 21-day expiration, the difference in the risk reward doesn't make sense. So a 0 day, let's say a 1% move in the S&P 500, which we haven't had many of them this year because volatility has been compressed, but a 1% move in the S&P 500 is going to give you, let's say, about a 255% return on a 0 days till expiration option. Now, if you go 5 days out, even 7 days out, that same option is going to give you almost 155% return. And if you take it probably down to like the 21-day range, I don't have all the numbers in front of me, you might be looking at a 95 to 100% return. But on that 5 to 21 day period, your drawdown or your risk is maybe anywhere from as low as 12% to maximum of 25%. But on the 0 days till expiration, if you're wrong and the position goes against you, you've got a 91 to 94% drawdown. You've basically lost it all. So you tell me, does the risk reward make sense? That's really the key. The setup is the risk reward. Analyze that and think about that and make that decision based on your own homework and your own research. But I'm telling you, for me, it doesn't make sense. And the key to this business is making sense so you can make dollars because we're here to make money. Secondly, do these things potentially have catastrophic black swan event risk? I don't know. I think that the fact that these things have been introduced, a lot of people are saying that they're messing up the VIX or these could actually increase volatility. I think the added liquidity in the 0 days till expiration options has probably actually reduced liquidity. And now, there's going to be a lot of studies done on this. We're going to find out more information on this as things go along. And I suppose if we do have a 2-3 standard deviation event, can this exasperate a move to the downside? Possibly, but then you get buyers to the other side and it swings the pendulum the other way. So, we'll have to wait and see. I think that the Armageddon, these 0 days till options expiration are going to destroy or crush everything. Doomsday scenarios are ill-conceived, and I think that markets have withstood a lot of fractures over many years with a lot less liquidity, a lot less parameters and risk controls than we have today. So did we get it right? Are we getting it right? Financial systems and markets are always evolving. And Wall Street's gotten it wrong a lot of times with swaps and derivatives and, the mortgage-backed securities during the housing crisis. And these things might just be too much for the average guy. But at the same time, retail investors and institutional investors are flocking to it. It's clear there's a lot of institutional demand for these things. So the verdict is yet to be seen. But My opinion, you're playing lottery tickets that aren't worth the risk reward. And two, what it does for the markets or a black swan event is yet to be seen. But I'll tell you one thing, these 0 days till options expiration are very, very popular and in high demand. And we at the Y Trader always want to address topics that are at the forefront and cutting edge of the financial market business. So as always, if you enjoy the content, you like what we do, please support our channel. Hit that subscribe button, hit that bell, hit that whistle, all that good stuff. This is Rothman, over and out. See you next time.